Well, Redfin just reported national home prices hit yet another record high. Now, what's wild about this is that they've been saying the same thing week after week. All-time high, record-breaking prices. The U.S. home prices hit all-time highs. And it's becoming a pattern. At the start of the year, Redfin actually forecasted home prices to drop 1%.
Redfin is officially now forecasting that prices will fall by the end of this year,
which makes the ongoing price increases especially strange. They're also reporting falling pending sales repeatedly, which mirrors what we're seeing here in Nashville, where pending sales are down nearly 7%. What makes this odd is we're seeing mortgage purchase applications up 25%.
A brief drop in mortgage rates caused buyers to come off the sidelines. Total mortgage application volume jumped 9.4% last week compared with the previous week, according to the Mortgage Bankers Association. Purchase applications were also up 9% on the week and 25% higher than a year ago.
Touring activity, it's up 16% year to date compared to last year, and even Google searches for home for sale are up 11%, and still contract volume is down. Around 80% of metros have declining pending sales volume. So are we about to see a bounce in contracts? Now, it's not showing yet in the data, but that's a lot of energy on the buy side that just doesn't quite appear to be translating yet. Now, nationally, median prices rose about 1% from last year. And this 1% growth, even at a record high, when you look at it on a chart like this, you can see the gap is closing. And it makes you wonder, what's going to happen next? Now, Lance Lambert even calls this out.
Normally, back in like 2016, 17, 18, 19, it's pretty normal for around 3-4% of markets to be down year over year for prices. But now, we're up to 96 markets now of the 300 largest, and that's 32% of markets down year over year for home prices.
Now, sellers are picking up on the softness, and they are responding. New listings have slightly decreased, and some sellers are starting to react by pulling their homes off the market due to slower conditions. Both Redfin and HousingWire are reporting that active listings are now declining. When we look at Redfin weekly housing market data, what we can see is last week we had 1,172,000 listings. This week we have 1,163,000, almost 10,000 less. Now, while that doesn't seem like a lot, look at the patterns for the previous years and you'll realize inventory dropping this early in the year is not something we have seen in years. This is interesting because this would suggest that there's really not that much distress out there. So when zooming in, typically prices go up in the spring, peak in the summer, and drop in the fall. But last year, we saw an unusual uptick starting around September. We saw this in Nashville as well. And if we revert to a normal seasonal pattern of prices, Nashville could end the year down nearly 5% without anything really changing. And Redfin could also make their price forecast of ending the year down 1% just by going back to a normal seasonal pattern. So I actually think they could end up hitting their forecast even though prices are up at this point. Are home prices really increasing, or is this a median distortion based on something called mix shift? It's one of the reasons I like what Lance Lambert was showing is I feel like Zillow's home price tracker may be a little bit better. But when we look at Case-Shiller, the 20-city composite home price index, which, by the way, this is based on repeat sales, so it's a little lagged, but it's more accurate. It shows a decline in prices. However, when we look at the national home price index, we continue to see through April that it continues to go up. However, to be fair, Lance Lambert does fully expect Zillow's home value index to go negative in the next few months.
And so Zillow Home Value Index is now decelerated to 0.5% of national appreciation, but it's going to go negative in the next few months. And the other indices like Case-Shiller, Freddie Mac, FHFA, Cotality, which used to be CoreLogic, they are all decelerating pretty quickly as well.
Now, one way we could solve this is to look at what's happening in Nashville, not just in the city itself, but in the surrounding counties, because what we can find may help enlighten whether or not prices are truly dropping or whether or not there's a mix factor in the data. Looking closer at Nashville, Davidson County saw transaction volume increase significantly, and prices even rose as well. Outer suburbs like Columbia, Gallatin, and Lebanon had fewer transactions, but still higher median prices. Now, when we zoom in on the zip codes, we can see something fascinating. The very inner core of Nashville does seem to be weaker on the transaction volume, but if you look at the immediate surrounding areas, you can see that closed volume is increasing. Mount Juliet, Smyrna, even Brentwood all have higher closed volume. But further areas out like Gallatin, Lebanon, and Columbia all showed declining transaction volumes, but still rising prices, indicating that while fewer homes are selling, they're selling at higher prices. Look, the mix effect is real. With more $1 million homes selling significantly compared to last year, it does appear that that's part of it. And I forecasted that there would be more $1 million sales this year. We may actually start seeing a jump in the higher $1 million sales going forward. But look, location analysis suggests that there is genuine price growth beyond just mix effect. Of the zip codes that I analyzed, 58% of them had positive year-over-year price changes in all price bands, from below the median price to well above the median price. In my personal experience, even slightly aggressive offers are getting outright rejections without counters, showing sellers' stubbornness. Of course, that was in Franklin, but still, sellers believe they can still hit their numbers eventually. They would rather cancel the listing than take a lower price, leading to lower active listing growth. And believe it or not, we could possibly be seeing an earlier peak in active listings this year than last, as that growth slows going into June. Now, on the bright side for buyers, price reductions are rising rapidly. They could be well over 40% of active listings in the next 2 weeks. Now, this could mean softer prices ahead, but it hasn't helped yet. However, the number one impact on the housing market is government policy. It will continue to be the most important factor. And because of the tax cuts, the tariff changes, the bond market shenanigans that I talked about last week, could all shift the market unpredictably. We just don't know what a Sunday night announcement will do. So whether you're a buyer or a seller, you need to be comfortable with abnormal changes in pricing, in demand, and everything else that impacts the housing market. It could go up, it could go down, we just don't know. So while uncertainty remains, particularly beyond the next few months, current indicators suggest national home prices, including Nashville, may face a softer than average second half of the year. It always seasonally drops. Maybe this year it'll be just a little bit softer. Thanks for watching. Hope you all have a great weekend. I look forward to seeing you next Saturday.